Better buy, Bitcoin versus strategy, MicroStrategy. Bitcoin has proven to be a dominant force in global asset markets, securing the top performance spot in 4 of the last 5 years with significant margins. Notably, 2020, 2023, and 2024 saw the cryptocurrency deliver triple-digit returns to investors. Over the past half-decade, Bitcoin has surged an astonishing 956%. Given this extraordinary track record, it might seem impossible for any publicly traded company to exceed Bitcoin's gains over the same period. Yet, MicroStrategy, recently rebranded as Strategy and trading under the ticker MSTR, has achieved precisely that. In 2025, Strategy stock has risen 20% even as Bitcoin has faced challenges. This performance has led some to question if Strategy now represents a better investment than Bitcoin itself. Examining performance across various timeframes, year-to-date, the last 12 months, or the full 5-year span, reveals that Strategy has consistently outperformed Bitcoin. While their performance was closely correlated until early 2024, a notable divergence has occurred since then. Over the past 5 years, Strategy's share price has climbed an impressive 2,758%, dwarfing Bitcoin's 956% return. This stark difference in returns alone might suggest that Strategy is a superior investment option. The 5-year timeframe holds particular significance as it coincides with Strategy's initiation of its substantial Bitcoin acquisition program in August 2020. Since that time, the company has aggressively accumulated Bitcoin and currently holds a remarkable 538,200 BTC on its balance sheet. At current market prices, this holding is valued at approximately $50 billion. Strategy has become the world's largest corporate holder of Bitcoin, possessing even more than the U.S. government. The company has fully committed to its Bitcoin strategy, going so far as to rename itself a Bitcoin treasury company earlier this year. Its stated primary objective is to continuously find innovative methods for acquiring and holding Bitcoin. Consequently, investing in Strategy stock has emerged as a popular indirect route for gaining exposure to Bitcoin for investors who prefer not to purchase the cryptocurrency directly through the spot market. Strategy has essentially become a widely recognized Bitcoin proxy stock. The introduction of spot Bitcoin exchange-traded funds (ETFs) in January 2024 presented investors with additional avenues for Bitcoin exposure, direct purchase, investing via a spot ETF, or buying a proxy stock like Strategy. The subsequent divergence in the performance of Bitcoin and Strategy in early 2024 is particularly noteworthy. In retrospect, it appears a segment of investors determined that Strategy stock offered a more attractive investment proposition than either a Bitcoin ETF or direct Bitcoin ownership. This sentiment has seemingly led investors to assign a significant premium to Strategy stock. While the company's Bitcoin holdings are valued around $50 billion, its current market capitalization is approximately double that, sitting at roughly $100 billion. Essentially, the market values Strategy at roughly twice the value of its substantial Bitcoin reserves. Several theories attempt to explain this premium. One potential reason is the enduring value of Strategy's legacy software business, despite it reportedly not being a primary profit driver currently. The company is not solely a Bitcoin holding entity, and its operational business presumably contributes some value. Another plausible explanation is that investors are anticipating substantial future gains in the value of Strategy's Bitcoin holdings, potentially expecting the price of Bitcoin to double within the next year. Given Bitcoin's history of delivering triple-digit returns in multiple recent years, this expectation is not entirely without precedent. Finally, the premium could also reflect the market's confidence in the management expertise of Michael Saylor, the company's founder and executive chairman. Saylor is a prominent Bitcoin advocate who has demonstrated a capacity for developing creative financial strategies to fund the company's ongoing Bitcoin purchases. This reliance on continuous Bitcoin acquisition, however, introduces a degree of risk. If the software business remains unprofitable, the company's valuation becomes heavily dependent on sustained, significant increases in the price of Bitcoin. The stock's current premium appears justified only if Bitcoin continues to experience substantial price appreciation. This situation might explain Strategy's active efforts to encourage broader adoption of Bitcoin by various entities, including governments, as new buyers could help drive up the price. While the increasing number of ways to gain exposure to Bitcoin is a positive development for investors, the question remains regarding the optimal method. For some, including this observer, the most straightforward and preferred approach remains the direct purchase of Bitcoin. Despite Strategy's recent remarkable performance, it remains to be seen whether any company can consistently outperform the underlying asset it primarily holds over the long term.